Hey, Danny Reardon here, and in today's video, I am going to break down one of the most powerful patterns in trading. And this pattern can be used for entries and determining a very accurate directional bias. Okay, so a rule of thumb that I want to quickly talk about before we get into the charts. One of the things that you should always keep in mind when you're marking up charts and you're identifying entry points and looking for areas that make sense to put your stop loss, always remember this. Price is gonna run where it can hurt the most people. And what I mean by that is stop you out, get you out of your position. So before I get into the patterns, I wanna show you exactly what I mean so you have complete clarity with that phrase. So when we look at this here, there's a couple of things that a lot of traders are going to initially see. And the most obvious one would be a trend line, something like this. And let me adjust this. And this is just a typical trend line where we can see price establish a high, and then this is basically a support and resistance level at an angle. And every time price comes up here, the idea is to sell it. And if price were to break these levels like this, what traders will then do is look for something commonly known as a break retest. And that looks something like this. Price breaks this resistance level, and then they look for price to come test these levels before pushing up like this. So what they're gonna do is they're gonna get an entry somewhere in this area. Maybe they'll also factor in this level here, where you have a very clear support and resistance level here, break retest level. So using that information there, once price breaks through this resistance level here and this trend line and does something like this, that is go time for them. That is their entry, and then they'll be targeting the next level, which could be here or at this high up here. Wherever they enter off of this picture here, they're going to be putting their stop losses in one place, and that is under here. So putting the entry tool on here, stop losses would go somewhere underneath this level where we can see this resistance level here. They're gonna put stop losses somewhere under this level here, and that's gonna be an area that accumulates liquidity. And then their targets would be somewhere up here. So you can see it's very subjective. There's no real rhyme or reason why their stop losses should be there. It's just a general vicinity. Same thing with the targets. It's just general areas. There's no accuracy to it. There's no rhyme or reason to it. So with this mapped out, what would be the area price would run to that would hurt the most? It would be pushing down after taking that level. So it would look something like this. Price breaks this level as price is retesting this support level here or this trend line here, anticipating this. But what would actually hurt the most people is price running through that level and stopping all of the people out that were building setups around what we're seeing here. This would hurt the most people. So just using this as a general guideline, a general rule of thumb, identifying areas where the herd mentality is in place here, where everybody is looking for entries, everybody is putting their stop losses in those areas, identifying those alone, just recognizing that and realizing, hey, if everybody's doing this, I probably shouldn't be doing it either, and just avoid those areas in general, because most likely they're gonna just get run on and you're gonna get stopped out of your position. So that's just a rule of thumb that I want you to always keep in mind as I go through some of the different patterns. Now, I'm gonna show you a couple of different things. I'm gonna show you a couple of different patterns here. And this pattern, I like to call a signature pattern. I'm gonna show you a couple of different patterns with this on mid to lower time frames, and then I'm going to show you the exact pattern on a higher time frame on a different pair and show you how we can use that pattern to get an accurate directional bias that could provide an accurate direction for several weeks or several months. So I'm gonna play this out, and this is a setup here that I was covering in real time in our community, and we went over this, and a lot of traders were looking at an area up here where there was a pattern. They were looking for price to break this level. When we were currently discussing it, it was on a Friday, and price had broken this level and it was looking like this. And that is the very thing that we discussed. We said avoid buying opportunities here. Stop losses, these lows are most likely going to get run on. And sure enough, that's exactly what happened. But before it did, it provided the signature pattern. So I'm going to show you that pattern really quickly here. And just a little tip here too. If you're really not sure about what the herd mentality is, right? Like you're not sure what the majority of retail traders are doing with support, with resistance and trend lines, something that I like to do is just go to tradingview.com and you can type in the pair that you're looking at, and you're gonna get to see all of the different ideas published by hundreds, if not thousands of people. And when we pulled that up on this pair, almost every single idea that was published was something along the lines of this. Was something along the lines of this. A break of this trend line, a break of that resistance, and then looking for this. Almost every single one. All right, so here is exactly what I'm talking about. So I'm on TradingView. I just typed in the pair Great Britain USD, and the majority of these published ideas look something just like this. They have that trend line marked up. They have the different support and resistance levels marked up. Price has broken those levels. It's retesting, and then that's what's going to give them their entry. And they can see the stop losses are all just under the lows. That's the most obvious, logical area to put your stop loss. And they're all looking for price to buy. So they're all putting their targets above these other resistance levels, other highs over to the left. And that's probably pretty crappy risk to reward there too. You're looking at a 1 to 2 risking 87 pips for 175.5 pip gain. So that's a big stop loss, a big target just for a 1 to 2 risk to reward. That's risking 1% for 2%, 2% for 4%. So again, super subjective areas and just nothing clear about where you want to put your stop loss. But just being able to identify this alone and what the majority of people are doing and avoiding aligning yourself, your setups with what everybody else is doing, that's just an easy indication of something you don't want to get involved in. So let's go back to GU and let's break this down, and then I'm going to show you the pattern and just how accurate this is. And once you see this pattern, this is something that is very hard to unsee. And this pattern is extremely powerful. Now I'm going to give you a quick demonstration of what this pattern looks like. And I'll also show you a couple different scenarios where this pattern can be found. So you'll see them in ranging markets. You'll see it in consolidating markets on all different time frames, from a 1 minute all the way up to a weekly or monthly time frame. So the first one, think of a ranging market. You have some consolidation and price is just overall moving sideways. And what we're looking for is price to move aggressively in one direction and then completely reverse and go 180 in the opposite direction. Now, ideally, we want to see it go in the opposite direction of what we just broke down. So what I mean by that is if we anticipate those lows to be the place where price will run to hurt the most people, we would want to see price run the opposite direction first and then in our direction. So just to add a few other annotations to this, here is our ranging market. These ranging markets, these consolidation areas, it's extremely important to understand that all these areas are doing, just like the trend line example, the support resistance example, it's generating a lot of ideas, a lot of opinions. You have people that are looking to buy off the support level. You have people looking to sell off the resistance area. You'll have a lot of people looking to do something like this as well, break retest. So here's our levels, resistance. You'll have people looking to sell this, putting stop losses somewhere here. You have people looking to buy the support level, stop losses underneath this level or another low. And then you'll have people looking for this, a break of that resistance and then they'll look for the same thing I showed on the trend line. Break of resistance, use that support as entry, and they'll look for something like that. That's a break retest level. A ceiling that's now converted to a floor. And when they do that, stop losses would go under this level here. That's the most obvious low. Same thing for the other side. If price were to break this level here first, what they're going to be looking for is a break retest to the downside. Price has broken support, and now that's going to be used as a new ceiling resistance, and they'll be looking for this. When they do that, the obvious spot here to put stop losses would be above this high. So that's why what we want to see here is a complete violation of both sides. And this is what we refer to as manipulation. But we want it in alignment with where we believe price to go, which is what we broke down earlier, where price would run to hurt the most people. So we would want price to run the opposite side first, like this. Let me just clear that just to make a very clear example here. Let's do this. So price is ranging. There is our consolidation, a lot of opinions being formed. We have resistance traders coming in. We have buy stops locked and loaded. If price breaks this level and people are trying to catch a breakout, you'll have stops under here, right? Support buyers here. It's the same on both sides. Buyers on support, sellers on resistance, buy stops on support, or excuse me, resistance, sell stops also on this support level, anticipating a breakout. Either way, stop losses are accumulating on both sides. So there's a lot of opinions being formed here. And what we're looking for is this: a price to break out to the top. This is triggering buy stops. This is hitting stop losses for anybody that believed price to be pushing down from here from this resistance level. And then when price comes down like this and retests, this is going to bring in all the buyers on that break retest level, and all their stop losses are going to go somewhere down here. And what we're looking for is the price to completely disrespect that level and now come out and now come take the bottom. So now it has completely violated both sides. Buyers were triggered, sellers stopped out. Now buyers who have their stop losses down here, whether it's a buy stop or just waiting for a break retest, right? They're all getting stopped out now. So that is what we refer to as the signature pattern. And this can happen in either direction. The bottom can be taken out first and then the top. And when we find this pattern here, this is something that can be found on all time frames. If we find this on mid to lower, we can use these for entries. Lower time frames, you can get scalping with this. Mid to higher, you can get intraday or swing trade positions with this. Higher time frames, you can get positions or position trading with it. All of this is very effective. And then on higher time frames, we can just wait for these patterns to emerge and then use these as points of interest for a directional bias for the next several weeks or several months. So ideally here, we want to see this pattern emerge with where we want price to go, right? So if we anticipate price to come down, we want to see it take the top side first. That can indicate to us that price is going to come to the downside. And we can see the same thing with a lot of patterns. We can see this with channels as well. This is one of my favorite patterns or scenarios to trade it, where we have a channel. There's all different names for this, but we can see price doing something like this. A lot of people refer to these as reversal patterns, and I'll clear this bottom one out here so it's out of the way. And it's the same idea, right? When price pushes up to the top, people will automatically assume that it's breaking this high here, and they will look for a break retest and then a continuation up like this. It's the same thing. What I would want to see here and how I trade these patterns and where you're going to yield the best results is wait for the manipulation. Wait for that high, and then I look for this. And that is running on the upside and then attacking the lows. This is basically inducing traders in at bad areas, right? Tricking traders, buyers and sellers. And then when you see this, now you have your new trading range. You have an established lower high and a lower low with a trading range that originated from manipulation. Then that is where we would draw our fibs from our swing high to our swing low. Our manipulation that created our lower high up here, and then our lower low here. And then we would find our manipulation candle up top here in line with our kill zone, our 71 to our 886. That would be our entry, very precise entry, and there's no doubt about where we're putting our stops. Doesn't matter where you enter this trade, you're putting your stop above the top of that manipulation, and then you're putting your target on the lows, equal lows, other areas. So this is what we just drew here. This is exactly what GU is showing. But it also gave us a couple other areas that we can use for entry. So what I'm going to show you now is what really took place with this pattern and the signature pattern that emerged, and how you could have had a very accurate trade setup that produced significant gains. So I'm going to mark this back up just like we had before. And this is the herd mentality. This is looking for price to break through and then look to buy, and stop losses accumulating down here. So this area at the bottom, that is where we would anticipate price to run. That would hurt the most people. So I'm going to play this out, and I'm going to show you where we were looking at this on a Friday, and then where the pattern emerged. So I'm going to press play here. There is the initial spike up. This is the break of the trend line, and this is the break of that resistance level. This is what's bringing traders into the market. Now they're looking for the retest. They're looking to buy. They're putting stop losses under these lows. Okay, just establishing that again and realizing that's not where you want to be putting your stop losses. You don't want to get aligned with the buy side here. You want to look for the sell side that would put you in alignment with the big picture, which would be price running to where it can hurt the most people. So I'm going to play this out, and then we're going to show you the pattern that emerged, and I'm going to see if you can spot it. Okay, so this is where the other guy that we showed here was looking for buys. So it looks like at this current moment, he's running in some slight profit. Now, I'm gonna drop down a little bit, and I'm gonna flick on the only indicator that I personally use, and this is called sessions, and this is a time and price indicator. And time and price, that is going to be another powerful training session that I'm going to do shortly, which I would really recommend to watch, because that's going to tie this all in. Now, I'm going to see if you can identify the pattern here that I just broke down. So right here, we can see price just moving sideways. This is consolidation here, and we can see another break retest level here. So we can see resistance and price just kind of sitting on this support. So what we want to see here is price aggressively push to the upside, and then aggressively push to the downside, taking out both sides of this range here. And then when we see that, that is going to be our signal, right? That's going to show and paint the signature pattern. And then when you see that pattern, that is going to be our signal to look for entries to take price down to those lows where everybody else is putting their stop losses. So I'm going to play this out here, and I'm gonna see if you can see the pattern. And there it is right there. So we can see price pushed up above all of these highs, right? So we can see Asian high, we can see previous day high, and then we can see when price got into this green box, that indicates a London session. And again, I'll talk more about time and price and the relevance here, but London and New York session, that's where all the volume is. So there's a lot of opinions that were being formed during Asian and based off the previous day price action. We can see as soon as London opened up, we can see it pushed up here as we're approaching New York, and then aggressively pushed to the downside, breaking structure. So anybody buying off this support, perhaps getting stopped out. Maybe they put their stops under this low or this low here. These would also be targets in alignment with the bottom area here. So that's where everybody's putting stop losses. I'm going to draw a line here at a ray here. Green line, that's our target, and this target here. a lot of lows here. And those are the areas, this bottom one, this general area, that is where people are putting stops from the buy side. But now we can see price has pushed up aggressively, taking those highs, and I'll zoom in a little bit. We can see a strong bearish engulfing candle and then just all black candles coming to the downside. And that is our signature pattern there. And once you see that signature pattern, you mark up your manipulation candle here. I'm going to change the color on that. Here is our fibs, so we can identify our kill zone. We can see price falls right in the middle of our kill zone, our 71 to our 886. That would be our entry here. And I'm going to show you a big difference between this setup with this pattern versus what we were looking for or looking at on TradingView. So our stop loss, there's no question about where we're putting the stop. It's above the top of this manipulation candle. That's a 12.8 pip stop, a lot better than this guy. He had an 87.7 pip stop loss with a 1 to 2. That means you have to have price travel 87 plus pips just to double up. Now, again, we're putting our targets on these lows, right? That's where we anticipate price to go. That's going to hurt the most people. That's 105.3 pip stop loss, offering a 1 to 8.2. So risking 1% here, and if price were to achieve this 105 pip target, that's an 8.2 roughly percent gain. Risking 2%, that's a 16.4 give or take percent. So now I'm going to play this out, and we're going to see how this signature pattern played out. So now we can see this brown background area. That indicates that New York has opened at 8 a.m. Eastern. There's a lot of volume in. This is the time that there's the most volume present in the market because we have London session and New York session open. And that is when you can anticipate strong expansion, impulsive moves in the market. And that's what you want to get behind. So here we can see price pushed up into that candle, coming into our kill zone. And now we're going to see how price reacts. So we can see it quickly pushed away. And I'm going to speed this up just a little bit. And now we can see price breaking down. And I'm going to go to a higher time frame really quickly so we can compare this to that pattern we were looking for, or excuse me, looking at with the break retest level. Okay, so here is the big picture. Here is where people are currently slightly in profit if they were buying off that trend line. And we're going to be looking for price to take this low. And then we can also, and we're talking about this in another video, how to identify higher time frame targets. But there's other lows that we can look at too. But just for this example, we're going to be targeting on this main low where the accumulation of stops is building. So right now we have our signature pattern. We're in New York session, the overlap. Now we're coming into New York and price has been pushing down and breaking down. So we're going to press play here and we can see price just falls out. Completely just shows an impulsive move to the downside and overall taking out all of the traders that were buying. Price easily ran to where it would hurt the most people. So rule of thumb again, identify those areas that would hurt the most people. Price is always going to run to those areas. And then find these patterns, these signature patterns, this manipulation that's in alignment with those areas. And you're going to have a very easy time identifying where price is going, how to get your entries, where to put your stop, and most importantly, where to put your targets. So that wraps up this video. Part 2, we're going to look at this same pattern, the signature pattern on a higher time frame so that you can use those patterns on weekly, daily, monthly to find a very accurate directional bias and then build setups over the next several weeks or months around those higher time frame patterns. So if you got value from this video, make sure to like and subscribe or leave a comment below if you have any questions.